right on the front page, folks, okay, they get a lot of great information there. Now, they have a new ticker and a new ETF. And I'd like to go over this again, Dave, because I've been watching this thing, and, you talk about coming out of this at the right time, and it's WFH, work from home. So can we just talk a little bit about this again? You can tell us what's inside this, and I know what the thinking was behind it. I mean, it's pretty cool, man.
Yeah, thank you. So, this fund has taken off since we launched it in late June. It trades on an average of $6 million a day, over 100,000 shares a day. For a new ETF, that's pretty significant. So,
yes.
That allows traders to be able to get in and out in ways that you'd want to. Now, what's in this basket, it's 40 stocks, all U.S. stocks and ADRs. And what it does is gives exposure to cloud technologies, cybersecurity companies, online project and document management companies, and remote communication companies. So we consider those to be the 4 pillars or themes that make up this greater adoption toward remote work. So 54% of CFOs have come out and said that they plan for roles that allow it to make remote work an option for them going forward. This pandemic has accelerated the trend toward people thinking about adopting remote work for productivity, efficiencies, cost savings. And now we're seeing is those stocks, those companies who power that technology really begin to be embraced by the market.
Yes, and I love the idea. I mean, there's not like one equity that, in a lot of different ETFs, well, in some ETFs, you get an equity that's 23%, 24%. I happen to like those in the oil market because, I can grab a few of them to see, okay, where it's going. This here, you get spread out really nice between, 3.5% to 4.5%, which is pretty cool, man.
Yeah, so that's another thing we did for this fund, which is a bit different. So think about the cloud space. If you don't have Microsoft and Amazon in there, you're missing, of course, the major portion of cloud providers.
Yes.
But because those stocks are so large, they have so many different business lines, we wanted to ensure they're in the portfolio, but minimize the impact that they're going to have, because oftentimes lately those names are being traded, whether or not just because they're associated with being the FANG or whatever we're calling that these days, and not always the underlying fundamental drivers of technologies that are being innovative, being rewarded by investors, and really being embraced by businesses and people who had never thought about them before.
Nice. And, what happens, folks, on their website, which is really cool. So you get up in the morning. Everyone likes to, you do your work in the morning. Now, as you're on there, what you're going to see, like if this morning, what ends up happening, you get up, you're going to be able to see where inside the levered market, I really like that you put this out here, Dave. I happen to have a Bloomberg, so I have it. But for people every single day, meaning the price moves, the volatility spikes, the creation and destruction of ETFs, meaning where are people going? Do you know what I'm saying?
Yeah, exactly. So it's a great point. We know, you have Bloomberg, I have Bloomberg. A lot of people do, but some people don't. And many people don't, right? It's an expensive tool. Right. And in fact, Bloomberg has 25,000 functions. Most people know 10 of them because you're doing the same thing all the time. It's a fact. When it comes to leverage and inverse ETFs, there's a few things traders need to understand. As long as you understand the risks that are involved, then you say where the opportunity is. And for me, I'm always looking not just at where performance has been, right? Because some days are going to be up big, some days are going to be up down, depending upon the bull or the bear. But I really want to know where's the money moving and where's the volume moving.
Yes.
Because then I'm going to get maybe an early read on something that is beginning to be a trade or beginning to be an opportunity that maybe I hadn't realized. For example, we know China had pretty healthy returns in the last week. We started to see our leverage and inverse ETFs begin to really move right away.
Yes.
So you started to see people kind of come into this before you saw some of the major pops. So, we recommend, again, for traders who are familiar with our products, take advantage of the new things we have on our website because it's all right there for you. Again, get a sense of where the money's already in motion. Whether you take the bull or bear on that's your decision, but the data's there for you.
Right. And it's so cool. So, folks, when you're doing that, what you could do is you could, I'm just looking. So last Friday, you have the TZA, that's small caps. You get the ERX, which is oil, and you get the SPXS. What you can do, you grab that, then drill down a little. I take it, Dave, and I just drill down a little to see those top names. And it really gives you, we all need, I don't care if it's a small edge or large edge, but it gives you kind of an edge as to where that's going. Because what has happened, folks, if we were talking 25 years ago, the ETFs weren't out there. The difference is that when people are buying the ETFs, well, the ETF sponsor has to buy the stocks or sell the stocks. That's what's so cool about this that you have set up every day. Because I think once people understand how an ETF is set up, well, they're only buying and selling because either me or you or someone else is buying and selling. But it's not like we're saying, oh, inside of that, that's a good stock, so we'll buy it. They have to buy it and they have to sell it, right?
Yeah, no, that's a good point. I mean, that's what the structure of a 1 beta ETF is. And then, of course, our leverage and inverse ETFs have total return swap on the underlyings to amplify the exposure on a daily basis. But like any investment, it's what's in the basket that drives performance. So to your point, if you're talking in the energy space, maybe you want that top-heavy trade because you know a few names are going to comprise performance and drive returns, and that's a good thing.
Right.
When you're thinking about a new industry or a new sector, maybe you want something that's more spread out, so you get exposure to established companies and emerging ones. So again, just know what you own. But again, on our new website, Direxion.com, you're going to find tons of tools and information to give you the insights that might be helpful for you. Yeah,
and folks, as you're over there, you can sign up right for their newsletter, The Exchange. It's a great newsletter. It's very quick. You know, it comes in. You get some really great. You really set that thing up right, man. I love how quick it is, and you can get a grasp of what's going on in the market pretty quickly. And of course, what all of us have been used to lately is that, hey, you just buy and, lay there. Well, guess what? A market like today, folks, okay, this might be changing just a little. We might have a two-way market here. We'll find out.
We will find out.
We got, let's see, Dave, we got 35 minutes before the close. Oh, I'm telling you, man. Well, listen, it's always a pleasure. You have a great week, a safe week. We look forward to speaking to you 2 weeks from today, Dave.
Thanks for having me back. Take care.